Hello and welcome to Stocks Down Under. My name is Stuart Roberts and I'm one of the co-founders of our service. And joining me today on the morning of Monday, the 22nd of May, 2023, is Mr. Andrew Dinning, who's the CEO of Sarama Resources, ASX SRR. Andrew, good morning.
Morning, Stuart. How are you?
It's a great day to be you, is the way I'd answer that question. We've got gold pushing up towards 2,000 an ounce. And in your Sanutura Gold Project in southwestern Burkina Faso, you've got 2.9 million ounces in your project, albeit a lot of that in the inferred grade, but it's fair to say that a lot of that will translate over once you've put some more drilling in. How does it feel to control a deposit that big?
Yeah, look, it's pretty good. It's been a journey. We obviously very much love the deposit. We've been involved in it for quite a while. We actually think it's going to be a lot bigger than where it sits now. So 2.9 is where the pin's in it at the moment. All our exploration work's focused on oxide. So we've just primarily been focusing on high value, near surface material that's proximal to existing mineralisation, so that when we do start mining this thing, it's very accretive.
Right. So the deposits we need to talk about are Tencoro and Bondi are the two ones. We were joking before we pressed the button. Did you name it after the beach in Sydney? And in fact, it's named after the village, which is called Bondagui.
Correct. Yeah.
But look, I'm from Sydney, so I'll take Bondi any day. But we'll call it Bondi for the purposes of this interview. Tencoro and Bondi, about a third of your endowment there, and as you say, it's open in all directions, is turning out to be oxide. Now that's gotten me quite excited, because you could basically get this company started just on some really low cost free milling oxide ore, and then spread out to the hard rock stuff, which doesn't kick in until about you get to the 80 meter mark. So what's not to like about this deposit, just in terms of the structures that you're sitting on?
Yeah, look, I think the project's very well positioned to give us a relatively speaking, a low capital startup, low cost startup with a very quick payback. I think if you look at the grade profile across the deposit as well, when you apply a 1 gram cut, you still have 2.3 million ounces over 2 grams. So, there is a very good grade profile there that leads itself to, having a fairly expeditious development that has, low capital, low technical risk, and a very rapid payback. So that's really been our focus. In the last 12 to 18 months, we did 20,000 meters of drilling last year, and that was just all shallow near surface material. We're really focused on the first 5 to 7 years of the project, making it inherently financeable. We obviously, where the jurisdiction's not a tier 1 jurisdiction. So, the better we can make the terms of financing, the better it is for us, and the simpler we can make the project as well, to remove as much execution risk as we can, the better we think it'll be as well. So, we think, with where the project's at now and where we think it can be longer term, we're probably better off, starting with a kind of mid-sized project, get cash flowing. As you point out, there's a lot of oxide material there, but there's also a lot of pretty good grade material to establish a project on. So we're doing quite a lot of work on that at the moment, and we hopefully have something out for the market to have a look at it and that in the third quarter of this year.
Right. So you talked about not being a tier 1 jurisdiction. Okay, let's just agree that Burkina Faso is not a tier 1 jurisdiction. On the other hand, I draw viewers' attention to a Canadian company called Endeavour Mining, TSX EDV, 8 billion Canadian market cap, and they've got 3 mines in the very same belt, the Houndé Gold Belt, that is going to be your company maker. Seems to me like gold miners can operate reasonably freely in a place like Burkina Faso.
Yeah, I think, I'm probably not calling it a tier 1 jurisdiction. That's probably from a geopolitical point of view, but from a geological point of view, it's definitely a tier 1 jurisdiction. If you look at Endeavour's deposits, in the belt, in the north, they have Mana, which is a 5 million ounce deposit, or it's plus 5 million. You have Houndé, which is about 80 kilometres from us. That's a plus 5 million ounce deposit as well. So it's a very well endowed part of the world. Typically the discovery costs around $10 an ounce. So deposits typically come to surface as well. And I think when you look at the mines that operate there, I think there's 8 or 9 mines operating now. There's normally a new mine built every year. So the most recent one is Ozone Gold, which is a Canadian company. They've just built the Bombore mine. That was built on time, on budget, commissioned just before Christmas. I think they just put out their first full quarter. I think they did 42 or 43,000 ounces at sub $1,000 an ounce, all in sustaining, and that's with a sort of sub 1 gram ore body. So I think that gives an idea of what you can do in Burkina. So
I'd love to control a gold mine with that sort of all in sustaining. That's just beautiful.
Well, I think it's interesting. If you look at the two lowest cost gold producers on the ASX, are both operate in West Africa. And if you look at, the mines mentioned just now, you have West African Gold, obviously, big success story for the ASX. They operate around $1,000 an ounce, all in sustaining. Orezone, just sub 1,000. The two projects I mentioned of Endeavour, they're both sub $1,000 an ounce. And then SRR, which is owned by IM Gold, which I think did 480,000 ounces a year. So, in Australia, people get kind of hyped up about the super pit. Well, that's kind of super pit output kind of size.
Right.
That operates right up in the north of the country, and I think that was a sub $1,000 an ounce producer as well. So, there's pretty good geology there, and they deliver pretty good deposits. And we believe we've got one of them. Our main deposit, Tencoro, sits in a middle of a big camp-sized system. So if you look at Endeavour, which I think we just mentioned before, they've got a deposit probably 5 or 6 kilometres west of our Tencoro deposit. That's currently sits at 1.2 million ounces. So just within a 5 or 6 kilometre radius there, you've got the best part of 4 million ounces, and most of that's probably within 150 metres of surface. So, we're not chasing this stuff to 600 metres. It's all shallow, near surface material. So I think, when you start putting the whole picture together geologically, and just the sheer gold endowment now and the amount of runway left, not only on our project, but on neighbouring projects, it's a pretty well endowed part of the world.
Right. And you've actually got a joint venture ongoing with Endeavour as well at Caso, and that's generated another 700,000 ounces or so. So it's fair to say things are looking up for you wherever you've gotten involved in this belt.
Yeah, absolutely. The Caso project, we vended some ground in to get our stake in that project, so it's a non-contributing interest. But yeah, that's all within truckable distance of the what we view as the centre of gravity, which is our Tencoro deposit. Likewise with Bondi, that's a high grade. The historical drilling on Bondi, if you have a look at our website or our latest deck, there's historical drilling in there. So we bought that from Orezone because it was a kind of stranded asset for them. You're talking kind of 50 odd metres at 5 grams from surface, 70 at 3 from surface. So it's a pretty nice little deposit, that one. And once again, that hasn't had a lot of drilling in it for quite a long time. So hopefully we'll get some holes in that very soon. We remodeled all their data, and I think all their raw drilling data. And I guess what was apparent to us was that, it wasn't very well drilled below 70 to 100 metres. So, and it wasn't very well targeted either. So we can kind of see in a long section where the block model is sort of 2.5 to 5 grams. You can see underneath that at 100 metres, there's not a drill hole. So we think there's a bit of runway left there as well. So I think, the challenge for us is when to stick a pin in it, when to do development. So what we're looking at now really is, probably get into production and then use funding to, I guess, grow the project. So we'll design the project as a stage development, probably 3 or 4 stages to get it fully into its straps, and use the cash flow to really hammer the area from an exploration point of view, which is really what it needs.
And it's fair to say that your PEA will evaluate some of those options that you're working on right now. The PEA that is in the works will look at these options. Yeah,
correct. We did quite a bit of internal work on project sizing. So we looked at a larger stick build project, and the capex involved in that for maybe 130, 140,000 ounce a year mine, or doing it in a couple of stages, and exploiting the fact that we've got a lot of oxide and a lot of that's got good grade. So we did that work internally, and we kind of thought, well, mid-sized project startups not a bad way to go when you looked at the numbers, particularly if you optimize things on an EV per share basis, because obviously, we need the equity fund to the point where we can put project finance in. So we kind of looked at that, the timeframes and accelerating development. And the PEA will kind of look at the, probably the best way to approach this and lay out what the next steps are for us.
All right. Now, you're an old hand at this sort of thing. If we go back in time, the Kilo Moto Goldfield in the eastern part of the DRC ultimately yielded a mine called Kabali, which followers of Barrick will know about because it's a big producer for them. That was you developing that for Moto Gold Mines, an ASX listed company, way about 2008, 2009. Randgold paid a big $600 million price to get hold of that asset. That's shareholder value that you hustled up.
Yeah, correct. We from when I got involved in that project, we took it from 2 million ounces of pretty scrappy ounces in the jungle to it was well over 20 million ounces when we were taken over. We took it through feasibility to pre-development, and we'd actually started, resettlement planning and everything when we were taken out. So that's the biggest gold mine in Africa now, actually.
Right.
Did 800,000 ounces last year. So we obviously don't get a lot of credit for that, but we were the guys that found it and took it through to pre-development. We built a 170-kilometre road in from Uganda, which we didn't even think about at the time, but I don't know what distance that is in New South Wales, but that's Perth to Bunbury in Western Australia, and we just did that. We didn't even think about it. We just knocked it out. So through the jungle in northeast Congo. So, yeah, that was a pretty stunning project, that one.
Is it true that you're actually Henry Stanley come back from the dead, and this is your new project? You develop gold mines in those parts that he used to stomp around in.
Yeah, it appears like it. It's I've done a few interesting places. I was in Russia before the Congo, so
right,
in Siberia, lived out there. So yeah, from one extreme to the other.
The one thing that's not working for you right now, regrettably, is the share price.
Yeah.
I can buy you for I suspect a little less than $1 per resource ounce right now. On a project that's got a reasonably good shot over the next couple of years, given the fact that Burkina Faso is open for business for new gold mines of ultimately coming into production.
Yeah, I think every jurisdiction's got its challenges, and Burkina's got its own. But I think if you look at West African and you look at Orezone, you look at Endeavour, they're all getting things done. I think Orezone's a single asset company. They financed that and built that during COVID. So, right. And they brought it in on budget, on time. So, and it's 140,000 ounces, and they're already looking at their next expansion. So I think they're looking to take that to, I think, around 250,000 ounces a year. So that's what they're working on at the moment. So it's not a dissimilar approach to us, but I think our startup will be smaller than theirs, but it's the same thing. It's I guess, get the runs on the board, take the shine off the ball and get it moving ahead. And now WAF's, I think they're fairly advanced in financing discussions for Kiaka as well. So,
I mean, once that happens, that'll the knock-on effect for you in terms of sentiment will be good, I suspect.
Yeah, so that'll take them to 400,000 ounces a year. So I think even though, there's a lot of background noise, you can still get stuff done in Burkina. It is a well-established mining jurisdiction. You just have to work through some of the challenges that you've got now. But I think every jurisdiction's got that. It doesn't matter if you're in Mali, Ivory Coast, Ghana, every place has got its own idiosyncrasy, it's just like Australia. It's, I don't know, with the way, politics is developing in Australia, and speaking to, former workmates that run exploration and development companies in Australia, I don't think life's that simple from a land access point of view and permitting timeframes and things like that. And right. I think one of the things, and Canada's the same, particularly if you're in the Yukon or BC. I think in Africa, particularly in Burkina, because the government does get a free carried interest, once they get line of sight to a mine development, they tend to push that along pretty well because, they see the cash flow. The biggest export in Burkina Faso is gold. Mining's 20% of its GDP, so it's pretty important to the country, and the government recognise that.
We're talking reasonable fiscal terms, like 10% of the project will go to the Burkina government, and the royalties are what you'd expect of any emerging jurisdiction. There's nothing that troubles me about the cost of doing business there.
No, it's pretty standard for what you see for that part of the world. It varies a bit between jurisdictions, but on balance, you end up with the government getting a similar kind of take through different means depending on the jurisdiction. So, yeah, it's got a well laid out mining code. and it's actually based on the WA mining code originally, and that was a catalyst for that industry to develop to the point that it has now. And I think, the government, I was there last month, and the government, they definitely recognise the importance of the industry. They're like all governments, they've got economic needs, so they're trying to find ways to get money whichever way they can. But they ultimately understand that, their best source of revenue is mines, and supporting them and make sure they get into production.
Right. Andrew Dinning, well done on what you've managed to achieve in Sarama to date. It's been a long journey battling your way through an old joint venture and then through COVID, but coming out the other side, things are looking up for you. So keep up the good work. Yeah,
no, thanks, Stuart. We see the opportunity in the project. That's why we stick at it. We've seen the numbers internally, and they look very, very compelling. So we're looking forward to getting this PEA done and out there. And we would see the numbers that we put out in that really as a starting position, because we think there's also a lot of exploration runway left in this project. There's a whole regional consolidation to consider with Endeavour, with their project next door and the other joint venture we've got with them. We've had a few discussions, but they're pretty keen on drilling more on the ground next to us. But really, I think longer term, probably the ultimate value play is all of that comes together. But I think if the first company in production there will end up controlling that part of the belt, and we aim to be that company. All right. Andrew Dinning, thanks for joining Stocks Down Under. Thanks, Stuart. Thanks for your time.